Good morning, MegaWhale team, and welcome back to the channel. The buyers have been able to finally break through the 113,000 horizontal resistance on the 4-hourly chart. We can also see a current retest of the weekly range at 113.9 to 114,000. This acts as a final point of resistance on the higher timeframes, in which, if broken and maintained above, will signify complete control to the buyers. This short-term rally is largely as a consequence of PPI data coming in significantly better than anticipated, something we'll be discussing in today's video. In the next 24 hours, we of course also have the inflation data releasing that is going to be in about 12 hours from now, so do expect a degree of volatility. Before we get into today's video, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. We're going to be taking a look at the short term, the macro, the weekly, the total market cap, and even the altcoin market, as the altcoin market is currently pushing aggressively upward. If you're interested in more of this kind of content, you can also join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into the content. So taking a look at the past 24 hours, volume is up a little bit, only 3.5% or so. Liquidations down 19%. 265 million in liquidations, pretty even between longs and shorts there, with volume up around 300 billion currently. Looking at the 24-hour breakdown of liquidations, majority coming from Ethereum, as Ethereum is still aggressively chopping up and down, Bitcoin with 42 million, and then the rest of the market for the remainder. Moving over to the DXY bumping up just very shortly on the short term, not seeing too much again. A lot of sideways movement here on the weekly. If we look at the last 4 weeks over here for the DXY, the open and closing prices for the DXY over the past 4 weeks have been in a range of 0.1%. Absolutely stagnant moving into interest rates. The market really waiting and anticipating for that major event. Moving over to the S&P 500, we are still pushing upwards here on the S&P 500 again, forming somewhat of a rising resistance, a ascending triangle formation over here, or should I say a rising wedge formation over here. We can see on the RSI, we have actually broken out of this downtrend on the RSI. This is a very, very important level you're watching, particularly over the next 24 hours. To maintain above this breakout point, which would signify the selling pressure has been absorbed, and we will likely see continuations upwards. Again, for us to be bearish on the S&P 500, we need to see a breakdown on this major uptrend. If we lose this uptrend, we then expect corrections. Until then, we are just watching to see how this develops, expecting again the whole number target 6,600, 6,700 as potential next targets. So keeping an eye on that, again, particularly moving into interest rates, particularly moving into inflation. A lot can change, so we don't want to be locking in anything too extreme currently. Moving over to the upcoming economic news, of course, as you know, PPI did come out. It actually came out negative 1%. The consensus and forecast was between 0.3 to 0.4. with the previous being 0.7, a massive drop here on PPI, really sparking a little bit of an up movement for the markets in anticipation of CPI and interest rate data, of course. With PPI dropping, this is a sign that inflation is, of course, cooling. It's getting a little better, which, of course, increases the likelihood for interest rate reduction. So it only goes to bolster the assumption or the current stance the Federal Reserve has, which is a moving closer and closer to interest rate reductions. Again, if we take a look at this flow chart here, we can see falling inflation results in interest rates falling, of course, results in debt to service ratios falling, available household cash flow increases, and that results in, again, debt being required to purchase assets as debt becomes cheaper, or just general spending on assets as household cash flow increases. So we see this general upward move for the risk asset market. And of course, the market does move in anticipation of events. So as we get closer and closer to interest rate reductions, and as that has been anticipated now for the last near 2 years, we have seen a major upward move for the market through the past 2 years, since of course interest rate discussions for reductions were initially proposed. That was back in November 2023. We have seen massive rallies across the board since then. So the market is still very much in a macro uptrend, has been for quite some time. And of course, while those interest rates continue likely to move down, we will likely see a macro continuation upwards. The question is, how deep do we go before we have those reversals? Are we going to see those reversals early, etc., etc.? That's really the big question that we've been discussing and talking about for the last few weeks. So let's jump into Bitcoin. We'll come back to the rest of the economic news in just a second. Before we get into the crux of analysis, make sure to go ahead and sign up to BitGet, BitUnix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go to support the content. You'll go to support me making this on a daily basis. And of course, guys, you'll support yourself in your trading journey, getting access to the exclusive 15% discount by signing up. And of course, access to every single monthly bonus campaign we have on our channel. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's get right back into it. I want to start by taking a look at the upcoming CPI data and of course the upcoming interest rate relief. So currently CPI is out in just over 12 hours. By the time you're watching this, it'll be just under 12 hours. We can see here the previous, the consensus, and the forecast for our CPI data month on month, year on year, of course, core and just base inflation. Overall, the consensus and forecasts are sitting around 0.3 to 3.1 for our month on month, year to year, and around 0.3 to 2.9 to 2.8 for our year on year. What we are really watching for a bullish result is we are watching for a result that comes underneath our forecasts. If we see a result underneath the forecast, it is likely the market will continue to rally into the interest rate news. If we see a result that is bearish, meaning above forecasts, we will very, very likely see a pullback into interest rate news. So we're paying very close attention to this because, of course, the 11th of September, which is today at Australia time, the next release of those interest rates are only all the way on, I believe, on the 18th. So about a week period, it could definitely set the tone for the next week of price action moving into interest rate data. So paying very close attention to how this unfolds. Of course, as we know, I personally don't trade news events. Hell, I haven't traded much this month at all. I don't really like trading into interest rate news at all. I find the market quite choppy. And of course, if we just take a look at the price action, it has been very, very choppy. Just take a look at this, right? So trading conditions do get a little tricky, particularly when you're momentum trading, but it does rely on a more clear swing trend up and down, not this sideways volatility and these sporadic moves. But when we're looking at, of course, trading in general, trading into events like CPI often puts yourself on, a little bit of a back burner. You're kind of putting yourself at a bit of a disadvantage because you are trading against people who just get the information early. You're trading against large funds who try and manipulate the markets in the direction in which they want it to try trap positions. Of course, a classic version of that was back in last month over here, where we saw massive amounts of spot bidding moving into NFP, I believe it was. We then saw again massive buy walls open up to hold the price into the news, and then the news released, even if the news was bullish, we then saw those buy walls eliminated, and we saw aggressive spot selling resulting in mass liquidations of leveraged positions. So again, large money can influence the market. Now, it's not manipulation. I don't believe in price manipulation in the sense that I believe the general cryptocurrency space thinks the market is manipulated. It is more so a variety of, or should I say, thousands and thousands and thousands of individuals. Every single time you make a purchase on the market, you are, in essence, to a varying degree, influencing the market in the direction of which you believe it is going to go. So if you have billions and billions and millions of dollars and you purchase billions and billions and billions of dollars worth of asset in a smaller time, you have a larger degree of influence on the direction of the market. Some people see it as manipulation, but the reality is that is not really manipulation. That's just varying degrees of influence based on capital exposure and risk and, I guess, market share of the particular equity or asset we are discussing. So looking at Bitcoin, moving into this news, we do have some key levels. I want to start on the weekly chart. We are looking at the weekly chart because in 4 days' time, we'll have the weekly candle close, and we are currently retesting the weekly range low. We've discussed before, what is once support becomes future resistance. So we are currently testing a weekly resistance, and this is a very important level on the weekly that we will need to break above and hopefully maintain above, which will facilitate continuations back into the range high. Now, I do believe if we are able to get back above this level on the weekly, it is highly likely we push back into the POC, which is around 118, potentially into 120,000. Now, to confirm this, of course, the short term will need to maintain where it is into CPI and hopefully through the remainder of this week. And of course, the weekly will need to close, which is in 4 days' time. If we fail to do so, this is still resistance and we could see corrections develop. So that is not off the table yet. We are retesting now a major weekly resistance, but the short term is beginning to look very good here as we are breaking through some critical points of resistance. So we'll come back to the weekly in a second. But in terms of the weekly chart, that was really the only major thing that we needed discussing, which is the retest of the prior weekly range low. A retest over here is good. If we break through, even better. If you reject, the downtrend is still in play in terms of the weekly chart. So keep that in mind. The downtrend is still in play in terms of the weekly chart. If we reject from here, if we break through, we reverse this downtrend. We enter again, yet another continuation upwards. So a good sign for the buyers initially, at least. Jumping over to the short term, from a daily perspective, we've seen a lot happen on this daily candle close. We actually broke through 2 horizontal points, of which acted as resistance over the past, we're going to say, around 2.5 to 3 weeks. Now, again, the breakout was largely as a result of PPI data, and we have got CPI data coming out tonight. So when I see this happen, I'm not jumping at the gun to believe in this breakout entirely yet. I'm waiting to see how the market will absorb and maintain moving into an after CPI data, to eliminate the potential for a fake breakout, particularly as the result of this move was largely as a consequence to the bullish result in PPI. Now, if we're looking at this breakout for what it is, without discussing economic news, from a horizontal perspective, we broke through 2 important levels. We broke through the weekly range low at around, or should I say daily range low at around 112,000, and we broke through the 4-hour resistance. If we zoom into a 4-hour chart, you can see this level of resistance here acting as a resistance for around about 2 and a bit weeks. We broke through there as well. Now, if we're zooming into an hourly chart, we can see some weakness developing, particularly if we're looking at the chop. Ever since the beginning of September, this is the beginning of September over here, we have seen very, very clear chop. And the chop reversal points have all been mapped out by weakening positive or weakening negative momentum shift. Again, weakening positive momentum shift over here, weakening negative momentum shift, if vice versa, has resulted in reversals in the trend. We've actually just seen another one of these print at the moment, sitting just above the resistance, which is now potentially a point of support as retested the change of character, which indicates that this may topple back down. There's a chance that to happen if we see what has been developing or playing out over the course of the last 2 weeks continue forward. But again, as a consequence to CPI data, there's more elements to this now we need to be aware of and potentially anticipate directional moves in either direction based on the result of CPI. So it's very important to understand the market's directional moves are based on individuals, buyers and sellers' decisions. The decisions are influenced by a variety of factors. It could be educational points such as perceived systematic risk, could be interest rate data, it could be inflation data, it could be policy development, it could be industry specific developments. But one of the main things we're talking about today is CPI. So CPI does influence people's decisions to buy and sell, and therefore has a massive influence on where the market will move upon release. So with that being said, to get a full understanding of whether or not we are going to see continuations up and down, not from just a speculative point of view, we need to actually see how CPI develops. So talking about the short term isn't too wise at the moment. We need to be zooming out a little bit and discussing, well, where could the price go based on good news and where could the price go based on bad news? So we've discussed this already over the last few days. We talked already that breaking through its resistance and maintaining above this resistance. The next point of resistance is the POC at around 118,000. So if we see good CPI data, if the market maintains above, we could potentially see this rally take us into 118, which will of course retest the sell side liquidity prior lower high, and very, very good, which you will see a weekly close, most likely a weekly close above the weekly range low, which will be a great sign the buyers are in control. However, if we see bad news and we drop back down, this could be marked as deviation from the horizontal range, and that could be marked a local top, and we will likely see corrections back into change of character, back into 110,000, something to pay attention to too. So watching that very closely moving into CPI tonight. Moving over, guys, let's jump over to the total market cap and total altcoin market. The total market cap is looking solid. Again, as we've said for weeks now, the total market cap is looking significantly better than Bitcoin. It's been in an uptrend. It is still in an uptrend. The uptrend was defined by this uptrending diagonal trend line. As we said a few videos ago, it is essentially like the hope for the market over here, because although Bitcoin has seen breakdowns on the weekly and corrections, the total market cap maintained very well, and that was largely as a consequence to Bitcoin dominance dropping, and of course the total altcoin market cap rallying, because we're seeing more of an environment here where speculative assets are performing better, particularly moving into interest rate decisions. We generally see the higher risk assets perform slightly better, which is why Bitcoin's kind of taken a seat back and altcoins are kind of shining a little bit more, particularly Ethereum. But with that, the total cryptocurrency market cap has been able to maintain this uptrend and bounce from the 3.65 trillion. If we look at cryptocurrency as a whole, we've said already, if we're looking at the cryptocurrency market, for the cryptocurrency market to be in a downtrend, that includes Bitcoin, that includes altcoins, the entirety of the cryptocurrency market, we need to break below 3.65 trillion and the weekly uptrend. When we see the loss of this level, we will have the loss of that level with the negative momentum shift on the RSI. That will confirm steeper corrections for the broader cryptocurrency market. Until that happens, we are kind of apexing into this horizontal high. And of course, if we break through the horizontal high at 3.95 trillion, that is the trigger for another move upward. So we're waiting to see how the market responds there. But of course, high time frame support retested, lose this level, we're in massive trouble for macro corrections. Hold this level, there's hope for reversals for Bitcoin, hope for continuations up market wide. Moving over to the altcoin market, and then we will wrap today's video up, a little bit of a shorter one because I've got things planned today. So taking a look at the altcoin market here, we have seen a weekly breakout on the RSI. We are watching to see the 4-day close, well, the weekly close in 4 days time, as that will confirm the breakout. Breakout targets 1.16 trillion, of course. Holding support above 1 trillion is what needs to happen. So we're only really bearish in the altcoin market, breaking below 1 trillion. We will see corrections. Until then, watching to see how momentum develops. Of course, if we close this weekly over here, it's going to likely confirm continuations into next week, which is continuations into interest rate news. So pay attention to that, guys. I think there's a lot of optimism in the market right now. I think things are looking a little bit better. But of course, we need to wait to see, are we seeing the market look better as a consequence to the news? Is that setting us up for potential corrections and deviations and failure? Or are we going to maintain this strength moving past the news? Because remember, it's very easy for the market to rally into good news, right? Just like it's very easy to be happy about good things. But it's hard to maintain that when it's been absorbed and it's dissipated and the hype effect has gone. Will the market actually still show demand at these levels when CPI passes, when PPI news is absorbed, or are we going to see pullbacks? In the moment, we have the weekly resistance, there's a chance of pullbacks, Bitcoin's holding above, it's looking good, but we are seeing some very short-term signs of corrections incoming. The question is, are we maintaining or are we going to drop? We have to wait to CPI, so pay attention to CPI, guys. Have a fantastic rest of your day. I look forward to talking about all of it tomorrow with you guys. I'll see you then. Bye.